describe a period of time where people were really, you guys as venture capitalists were very entrepreneurial, freewheeling, went according to your gut reaction. I mean, even when we started Hybrid-Tec, I remember with Tom Perkins, it was his gut reaction that said, hey, this is pretty neat stuff you guys are doing. I'll give you a couple $100,000. I mean, I asked for a couple hundred. He said, I'll give you 300. Remember, on his first, and that doesn't happen today very much. I'm a venture capitalist now. I've joined the ranks. I have to write a 10-page deal memo, looking at the markets and doing due diligence, calling pharmaceutical executives and all this kind of stuff. We can't do investments the way we did them before. Is that true? Or maybe it's not true.
It's not true for us. One of my Boston partners has a great quip. He says, due diligence is what you do when you don't want to do a deal.
Yeah. He described that to Zynga. I told him to mention the word Zynga.
No, but I mean, a lot of stuff I do in my private life is all based on gut feel.
Right.
I mean, at least not many good things come with age, but one of them is you get a good template matching and quick ability to say, does this sound like a good idea? Can I see this through to a liquidity event and so forth? Sort of, either pro or con. Sort of like Eisenhower saying, you didn't think a land war in Asia was a good idea, so he wasn't going to bail out the French at Dien Bien Phu. Anyway,
but that's your fund is, you've had a lot of successful funds. Your funds have in the past tend to be a little bit smaller than some of the others. So are you able to continue that kind of operations?
We are, because we like to give people enough.
What about Domain, much larger?
Well,
Domain has much larger funds.
we do it. Yeah, I mean, the short answer is, with a $500 million fund, you can't take $500 million and say we're going to, be entrepreneurial with it. But we have created, we have I guess we describe it as if you would, a company creation activity within our firm, and Eckhart Weber and Debbie Liebert, who is working closely with him. Their whole mission is to create companies from whole cloth, to be essentially sort of the entrepreneur in charge, if you would. And Rexogen, a local company, their products are based on inventions that Eckhart made with a couple of other people. So, you could call us entrepreneurial. We started that in about the year 2000. Okay, we're going to continue to do it. We think it's one of the best activities we have ongoing. We more recently invested in a company that is in the CTC space, Epic Sciences, that's out of Scripps. We seeded that about 2.5, 3 years ago, Kim Kamdar's pet project, and we're highly enthusiastic about that. So we're still seeding things at an early stage. We're still allocating partnership time, but it's not 100% of what Domain does. And just to that end, the industry has become very institutionalized in terms of sources of capital. And if you go back to the decisions that Kleiner Perkins made with Hybrid-Tec and Tandem Computers and a variety of the companies that we tend to, obviously Genentech, they had about 4 limited partners. They had Stanford and they had the Hillmans essentially pushing not too much money at them, and they did very well by that. And BioVest, which has got to be the most successful venture partnership ever created with you and Ted, that's $5 million that came from Henry Hillman and a little bit from Stanford, not from
Sutter Hill Ventures.
Sutter Hill Ventures, right. And so you had 2 people that basically said, boy, we got some horses, we're going to ride them, and they did. But you can't scale that. In fact, I think one of the great stories is Stanford came back and said, we'll give you $50 million, and you guys said, no, we're not, you can't do it. I don't, that's your story.
There are multiple reasons.
Well, let's just talk about, Kevin has touched on some of the things that have changed already over the past 30 years. He's talked about the absence of the IPO market, but let's talk about what else is going on. There's been, I'm in the business, there have been substantial changes in the venture business and funding life science companies over the past 30 years. It is extremely challenging today, I think, for the most part. Can you elucidate a little bit more? What are some of the, Tim, what are some of the other things besides the IPO market vanishing? The IPO the public used to finance our companies and take them, and we'd achieve liquidity. They were willing to bet on our ideas, but after a while, when they saw that they weren't making any, as an index, they weren't really making much money compared to treasuries, I think they backed out. And the public doesn't finance hope and promise anymore like they used to. So what else has changed, Tim?
Well, I think, you know, with the IPO going away, I think that one of the things that when Ted Green left Hybertech, he wrote a memo at their request to Eli Lilly, where what he said is that the pharmaceutical companies will follow the path of the oil companies, that the biotechs will become the wildcatters to find the oil, and the pharmaceutical companies will be left owning the pipelines, the refineries, and the gas stations. And I think that's somewhat coming true. I mean, you find today that some of the big pharmaceutical companies, you know, are shutting down campuses where they had 3,500 people doing R&D, and instead are saying we could take that money and we'd be better off buying the biotech companies as they develop because they're so much more productive. So I think that's one of the things. Now,